Day traders, Raghee here. The idea behind what we're looking at in terms of exhaustion on the daily time frames of the indices is one that we talked about on Tuesday. So let's follow that up here. Thinking about where we have resistance. And I want to talk about resistance in two ways. And hopefully this is something that a lot of you are starting to think about since we just finished the volume decoded class. And we're looking at volume-based resistance. And also the patterns on the price chart that confirm that these resistance levels are holding. Two kinds of resistance here. Volume, right here at the mean. You can see how many times we've exhausted at this level since August, and we're right in that area now. Choppy market structure, and here is our stochastic overbought, up at the high level, the 80 level. Take a look here at our price patterns, breaking down through the low of the 15 of November candle. That's a 39.60. That was the trigger for potentially more movement to the downside. I'm not talking about unlimited movement. I'm not talking about a crash. What I'm saying is we're likely to retrace probably most of this move we saw from November 3 to November 15. So let's talk. Now, we talked about this setup on Tuesday. Let's talk about targets. Pretty easy. Cut that range, cut that move, that last major move in half. This is not high level Fibonacci work. This is actually really easy. 50%, sometimes called a half back move. Kind of two steps forward, one step back. 38.78, 38.77 and a half would be a pretty good downside target. I'll look at that initially. Now, the other thing that's interesting about this move, and that is what's going on in the bond market. So we'll talk about bonds here and also gold. Bonds have gone neutral. They are at the moment overbought. So yes, this pattern could be similar to the one that we talked about. If we want to take the short side here, this could be a similar pattern. We still need today's low to be broken. That would be breaking down below 125.06. And then I'm just looking for a really simple 50% retracement. That's been my bread and butter, really simple. Is to look for about a step, two steps forward, one step back. Look at the last major move. In this case, we are overbought on the stochastic, so I'm not setting up a buy just yet. Resistance here, right? We've definitely had some trouble with the -1 standard deviation, and I would not presume this time would be any different, right? So overbought here on the stochastic, standard deviation resistance. Let's wait for the low of today's candle to be broken. And not looking for a big move, but this 122.15 level gives us the ability to at very least move to a break-even stop or scale out of half the position and look for how much lower is low and set up a T2. So that area right there would be a great initial target. That's something I'm looking at on ZB. And finally, let's jump on over to gold. All right, these are, I believe, all markets we've talked about in the futures room and in my sector secrets mastery, as well as on Tuesday's video. Here's gold. The low for the breakdown was through 1770. That has begun. Really simple, basic target. And you can even look minor low to minor high. And that's built into the Darvis 3.0 indicator. 1705 would be fantastic. So that would be an initial downside target for gold. Maybe it's GLD puts, maybe it's micro gold futures, maybe you're in the gold futures, but that has begun. All right, now what's really cool is if bonds and gold and the S&P are setting up, some of you are also looking at the UUP or the dollar index. These are different ways we can trade currencies. We'll talk about this more in the premium video. And in the meanwhile, have a wonderful rest of your day. Remember that we are getting into some really good clarity as we wrap up the end of the year. Day trading has been phenomenal. We've been trading about 2 to 6 setups per morning from about 9:30 to 10:35 in the futures room and in my sector secrets mastery each and every day. But heads up, tomorrow is options expiration. Not a day that I love to be day trading in the morning. Know those volatile days. Options expiration is one of them. Non-farm payroll could be a tricky one, as can end of quarter. So when you have those kinds of days, even FOMC days, they can be tricky. Be aware of that. And be careful tomorrow if you are taking those day trades. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.